the big danger that everybody has today is not financial or economic. Your biggest danger today is actually a political danger. Gold is now trading more than it should be by historical levels, but that doesn't mean it couldn't go to $10,000 an ounce or more, because who wants to hold the dollar? It's funny, when Trump started this war, or Netanyahu, they said it'll be over in 2 or 3 days. The Iranians are going to make this an asymmetric war, a long war. That's bad news for us here in the West.
The S&P 500 is now at the lowest point since the beginning of the year 2026, and with oil at nearly $100 a barrel, this may turn out to be the biggest market crisis in years if the Iran war continues to drag out, says our next guest, Doug Casey. Doug's been on the show several times, warning us of a greater depression. This is it, he says. Doug Casey is famous for having been the author of several best-selling books, including Crisis Investing. He's also the founder of theinternationalman.com and the Crisis Investing newsletter. No other person I can think of right now is better situated to talk to us about crisis investing, because that's exactly what's going on right now. We're going to find out what Doug is doing with his money and how to survive this storm. Also, don't forget to check out my Clips channel, linked in the description down below. It's a second channel I just launched this week that has short highlights of my long-form videos for you to jump straight to the content that you want instead of watching the entire thing, and also eventually original short-form content as well. Back to Doug. Welcome back to the show, Doug. Good to see you again.
Well, thank you, David. And I hate to be wrong about unfortunate events, but
yeah.
Anyway, it's nice to be here with you, although for me, here is in Buenos Aires at the moment. So
I think all of us watching what's happening right now in Iran, and oil for that matter, and stocks getting spooked by higher oil prices, have two main questions in our minds. This is from just my own sentiment, as well as talking to people I know, especially people on my own team who have been helping me with my research and ideas. And the two questions come down to, how long is this war going to last, and how do we survive as investors? Nobody really knows the answer to the first question. I don't even think Trump knows the answer to that. And number two, you've written literal books about what to do in this exact situation. When war erupts, when multiple countries are involved, when an entire region is on fire, and when oil is spiking up to $100 a barrel, what do? Let's start with that.
Okay, well, the big danger that everybody has today is not financial or economic. Those are huge dangers, and we can talk about them. And they're, the economy and the financial system are coming unglued. But your biggest danger today is actually a political danger. So you have to diversify politically as well as financially. I know it's not within the ken of most people, but if you're able to, you should have a crib in another country in case things go bad. This is look, we're entering something that looks like World War III. And many times in history in the past, people have been caught flat-footed, being in the wrong country at the wrong time. It happened in Russia in 1917, Germany 1933, China 1947, Vietnam 1975. It's a long list. So that would be my best general advice, although I recognize that most people today in North America are hanging on by their fingernails economically, so they can't diversify. But if you can, you should. Certainly before we get foreign exchange controls, which I also think are on the way. That'll make it impossible for you to diversify, even if you're able to.
Why are we entering World War III? Russia and China are currently sitting on the sidelines, not actively participating yet. And many of the U.S. allies, including Canada, have verbally said that they are not going to participate in the Iran war.
Well, they don't have to. First of all, the question comes up, does the United States, does America need allies? And my answer to that would be no, it doesn't. Quite frankly, anybody that allies with the U.S. today can't bring much to the party. In fact, American allies are nothing but tripwires and burdens on the U.S. Well, it's pretty much like John Adams said, the U.S. shouldn't go about the world hunting dragons, which is what we're doing at this point. This current war between the U.S. and Israel and Iran could, however, spill over and get much bigger. And I don't think it's going to go away. You know, it's funny, when Trump started this war, or Netanyahu, or the two of them together, they said it'll be over in 2 or 3 days. But they didn't seem to understand that Iran is a big country and it's hunting big game. And they thought they could decapitate the regime and it'd be all over in a few days or a week. But the Iranians are going to make this an asymmetric war, a long war, which the U.S. is not suited to fight, nor is Israel for that matter. So that's bad news for us here in the West.
Doug, do you see this turning into another Iraq war or Afghanistan war that lasts a decade?
Much more like Afghanistan than Iraq. Iraq was kind of a conventional war, who was that general? Schwarzkopf said, "Yeah, we do deserts. We don't like to do jungles. We don't like to do mountains." So it worked out pretty well in the short run in Iraq. But you got to remember that this misadventure in Afghanistan lasted 20 years, and the U.S. walked away with its tail between its legs, defeated by backward people, basically using AK-47s. And it wasn't as bad as the exit from Vietnam, which was a real embarrassment. You know, people hanging on to helicopters from the top of the embassy, but they were they were putting themselves in the wheel wells of planes taking off, and had to desert $80 billion worth of equipment in Afghanistan. It's not going to end much better than that in Iran. I just hope that they don't put boots on the ground, which they're now starting to talk about, idiotically, in my opinion.
Before we continue with the video, I'd like to bring to your attention something that's perhaps even more valuable and important than your investment portfolio, and that's your personal data and your privacy. Now, your personal information is more accessible than you may think, and that's where today's sponsor, Delete Me, comes in. Data brokers and search websites gather and sell details like your name, home address, phone number, and even family connections, sometimes without you even realizing it. Delete Me is a service I use to help me limit that exposure. Setup takes only a few minutes, and after that, their team handles everything. They identify where your information appears, confirm those listings, and submit removal requests to hundreds of data broker websites. They also continue monitoring over time, since this data can reappear. I've been personally using it for over a year now, and they've reviewed over 325 listings for my information. The reports show exactly what was found and what was removed, which makes the process transparent. If you want to check it out, go to joindeleteme.com/DavidLin, link in the description down below, or scan the QR code here to get started. Use my code DavidLin for 20% off. Get started and protect your privacy today. Actually, you know, the U.S. has sent 2,500 Marines to the Middle East as we speak right now. More Marines and warships being sent to the Middle East. About 2,500 Marines aboard, as many as 3 warships are heading to the Middle East. No official announcement as to whether or not these will be deployed to Iran itself. They are being sent to the region for evacuation, peacekeeping, and other special operations. So based on what we've observed so far, how do you think this will progress?
Well, war is the most unpredictable of all human activities, of course. But 2,500 Marines can't do anything against the Iranian Guard, which is 200,000 dedicated fanatical type soldiers, plus 1 million regulars in the Iranian army. So I don't know what 2,500 Marines are going to do. They might have a plan to, for instance, attack Karg Island, which is a small island, but it's where all of Iran's oil is transported to before it's shipped out. From there, well, they could take that island. That might be a clever play. But this war is immensely expensive. And the fact is that the Straits of Hormuz, everybody knows this at this point, 20% of the world's oil used to flow through the Straits of Hormuz. But it's basically cut off. at least to the degree that the Iranians want to cut it off. And they want to cut it off to friends of the United States and Israel. So those tankers aren't getting through. But if you're nice to them, your tanker can get through. But the world runs on oil, frankly. And what's happening in Dubai, for instance, Dubai, Qatar, Abu Dhabi, they're looked upon as puppets of the U.S., and in fact they are. Bahrain, which is where the Fifth Fleet is based, has basically been blown up already. The Fifth Fleet can't stay there anymore. I think it's a bad idea to fight a war on the other side of the world, especially if you're the one that launches the attack, if you're the aggressor, okay? This is an unprovoked war. Yes, I know. The Iranians have said bad things about the U.S. They've used lots of harsh language, and this has gone on for 40 years. But there's been lots of provocation on the part of the U.S. against the Iranians since they overthrew the Shah. So this isn't a one-sided thing where we're the good guys, they're the bad guys.
How does the U.S. lose this war, Doug?
Just by letting time go by and bankrupting itself. Look, it's one thing to provoke a war against somebody that you perceive as an enemy, somebody that doesn't like you. But when you do this, when you're already $40 trillion in debt and running $2 to $3 trillion deficits, which have to be monetized, all that money can't be borrowed from the Chinese anymore. It's got to be printed by the Federal Reserve. So the debt goes up, inflation goes up, the standard of living goes down. That's how the U.S. will lose this war.
The notion that markets respond positively to war, can you just verify that statement? Perhaps some sectors do better than others, oil, for example, but generally speaking, how does war, especially in another region, impact capital markets?
Well, look, as I said, I'm talking to you right now from Buenos Aires, and Argentina's always done well during World War I, World War II, other dust-ups like that, because it wasn't involved in the wars, it wasn't attacked, but it made a lot of money shipping farm commodities to the warring countries. They couldn't farm, they had to fight, so it was wonderful. So yeah, you can make money from a war. And companies like Raytheon and Lockheed and the rest of these companies, they're going to do very well as the U.S. government throws money at them. But the rest of the economy is not. Because, look, war is not good for the economy. You're basically destroying real wealth. And the fact that you have to build it up again and somebody makes money from that, the amount of real wealth in the world goes down. War is a very bad thing for everybody and everything except the state. The state gets bigger. So that's why the people in places like Washington and Tel Aviv, and for that matter, maybe Tehran, are all for war, but not the common person. Even the Nazis knew that during World War II.
How does this war impact the regular American person? Besides gas prices going up at the pump, how else does it impact us? You mentioned it may spiral out into a global war. Okay, well, that's bad for everybody involved. But until then, should we care is the question.
Well, look, I'm trying to think of the bright side of having a war. And it's been said accurately that war is nature's way of teaching Americans geography. Most Americans had only heard about Iran. They couldn't find it on the map. But now it's been drawn to everybody's attention. Is there anything good that can come of this war? Well, let's suppose, the two bad actors in the Middle East are the Israelis, who all of their neighbors hate, either overtly or covertly. Maybe they're acting friendly now, but the Israelis picked the wrong place in the world to start a state 80 years ago. So, but right now they're at cause for all these problems, and the Iranians are just like the Israelis. But look, the thing is I'm sorry about it for those people, but it's their problem. It's not the problem of us here in North America, what they do. You've got to leave them alone. It's like getting involved with a clan war between the Hatfields and the McCoys. I don't know if Canadians will reference that, but it's a famous family war in West Virginia that went on for 100 years, and everybody forgot why they hated each other. The best thing to do is don't be involved in it and bankrupt yourself, make new enemies, get a lot of. That's the only answer. That's what the U.S. should be doing, period.
What should be done about the skyrocketing oil price? So here is an article from the FT. The CME warns, the head of the CME has warned the Trump administration it risks a quote-unquote biblical disaster if it attempts to lower oil prices by intervening in derivatives markets during the war with Iran. Many people have called the government to intervene. What do you think?
I think, this is stupidity on stilts. Sure, the U.S. government can do things in the futures market to suppress the price of oil. But the way an economy runs is you need price signals. You need to know what things really cost. And if the government elevates or depresses prices, it gives false signals to the economy, the businessmen, and it results in a bigger economic disaster to cover things up in the short term politically. And as most of the production in the Gulf stays offline and tankers are afraid to go through the straits because it's dangerous, oil prices could go a lot higher. And as the U.S. government keeps printing up trillions of new dollars, even gold could go higher. Although I hasten to say, gold is now trading at more than it should be by historical levels, by comparison to a house or a car or a suit of clothes. It's now above where it should be historically, but that doesn't mean it couldn't go to $10,000 an ounce or more, because who wants to hold the dollar? The dollar is a hot potato. And not just because it's losing value and will lose value much more quickly in the future, but look, this is what BRICS was all about. They don't want the fiat currency of a bankrupt government. So what are you going to use instead of the dollar? Nobody wants to use the ruble or yuan either. That's why gold has gone up. It's the only financial asset that's not simultaneously somebody else's liability. And I've been a big gold buyer for, 50 years. But what I've really done that's been good is speculate. I don't say invest in small gold mining stocks. I mean, look, there's a friend of mine here in Argentina, and I meet him socially. And it turned out that he's a big shareholder in a small mining company. It's trading at 5 cents a share in Vancouver. I looked at it. Now it's trading at $1. Well, I bought it too. But this has happened all over with these small mining stocks at this point. I don't know. I don't know if they're going higher at the moment. They've had a really good run. But the fact is, and you can contradict me if I'm wrong, because you're on the ground in Vancouver, David, but I don't think the retail public is involved at all, basically, in the mining stocks or even the small oil stocks. It's just the cognoscenti that have been buying these things so far. The broad public has not. Am I right? Am I reading this correctly?
I can't comment on exactly whether or not the shareholder structures of all these companies have changed. Certainly, I've talked to some of the juniors myself, and they're targeting a more institutional focus now with the price going up. So I don't know if you're right or wrong on that. I do know, and I have personally attended the Vancouver Resource Investment Conference, that this was the most widely attended conference in their history in recent years, in the last couple of decades, actually. It was just jam-packed with retail investors. Whether or not they're actually putting money in, I can't confirm, but I will tell you sentiment on the ground is euphoric.
Okay. But institutions, there is more, but it's not like in the old days, it seems to me. There was much more than there is now. And as far as institutions are concerned, central banks, which are institutions, have been buying lots of gold, but it's just them that have been buying gold. The public hasn't been buying gold at all. And mutual funds and things like that haven't been buying these mining stocks really at all either. I mean, they want to stay away from them because they're poison from an ESG, DEI point of view. You know, everybody knows miners rape the earth and exploit the natives and all these terrible things. And of course, it takes 10 years from the time that if you're lucky enough to find that Easter egg in the middle of nowhere, it takes another 10 years to put it into production, which is when your problems really start. So no, I think that these mining stocks are, believe it or not, still undervalued. Gold, slightly overvalued. Mining stocks, still very cheap. I think they got a big run in front of them still.
But Doug, I'm just going to show you the chart of gold right now. And this, where my cursor is February 28th, February 26th, yeah. February 27th. That's the day of the opening hours of the attack on Iran by U.S. and Israeli forces. Since then, gold's come down. And so the narrative that gold has been a protector of wealth during times of war, so far it's done the exact opposite. Has a price pattern in the last 2 weeks changed your mind on holding gold as a safe haven?
Well, it's run up, it's doubled in the last year. So perhaps it was anticipating exactly what's going on right now. So buy the rumor, sell the fact. Maybe that's what's going on right now. And as I said, it's relatively overpriced at the moment. But look at it within the context of the broader market. Gold as a percentage of people's portfolios is about the lowest level in history. And for that matter, commodities are grossly underpriced relative to financial assets. In fact, it was just last week, I bought a bunch of corn ETFs. So I'm not just looking at gold and silver, but I'm interested in uranium also very much, and coal, which has been a dead duck for a long time, and the grains. The grains are very cheap at this point. In fact, they're the cheapest area of the commodities market for what it's worth. And as I said, I bought the corn ETF. I trade futures, but I'm playing this for a long ball. I'm not a trader. I'm a speculator. They're different things. They're not the same thing.
Trader and wait, what do you mean by that? Trader and speculator?
Well, a speculator is someone who looks for distortions in the market and tries to take advantage of distortions, preferably that are cranked in by government action. And there's a lot of that going on today. A trader is somebody that's trying to, in my opinion, trying to second guess the market, meanwhile getting eaten up by daily bid-ask spreads and commissions. And most important, the area between the two ears where you suffer from fear and greed back and forth. So I don't believe in trading. I believe in finding a distorted situation and capitalizing it for a period of months or preferably years.
I'm going to give you a few statistics that came to my attention just this morning, Doug. So first of all, fourth quarter GDP in the U.S. was revised downward this week. GDP, a measure of all goods and services produced across the U.S. economy, rose at only an inflation-adjusted annual rate of 0.7% in the fourth quarter, according to the BEA. The first revision of the GDP reading was a sharp step down from the previous estimate of 1.4%. That's just in the U.S. People have been commenting all over social media on the dismal state of the Canadian economy, in which I currently reside. Canada just posted its worst job losses in over 4 years. Unemployment has jumped to 6.7%. Youth joblessness tops 14%. That's double digits. Meanwhile, it's been reported by the Financial Times that, not this particular article, CBS rather, my mistake. CBS reported a record share of Americans are taking emergency withdrawals from their 401ks. In 2025, 6% of people enrolled in 401ks from Vanguard made so-called hardship withdrawals from their accounts, up from 5% in 2024. I wonder if this is just, it was low before and now it's reversing back to trend. But anyway, it doesn't look good. Is this what the beginning of a... Sorry, go ahead. Yeah, I'll let you respond to these things.
Yeah. Well, look, I've been saying for years, because of things that have been going on for a long time, that we're heading for a depression, a period of time when most people's standard of living drops significantly. A lot of the wonderful standard of living that we have in North America has been financed by debt. And one of the things that debt does is you're mortgaging your future when you take it on. And there's huge amounts of debt on all levels at this point. And at some point, that chicken has to come home to roost. So I guess my advice to the average guy out there is, okay, the economy is still held together with chewing gum and baling wire. So I know this will sound ridiculous, but cut back your standard of living, your expenses, what you're spending, going out to restaurants, bars, sell the expensive car that you got a $5,000 a month payment on and buy something cheap to get around in, because things are going to get worse. So act now. Take 2 jobs if you can and put aside the money prudently. Pay off your... that sounds inflammatory for me to say this now, but I think if we talk in a year, David, a lot of people are going to wish that they'd done that, because they'll be forced to do it against their will. They won't be in control. Now you can do it voluntarily. A year from now, a lot of people will be forced by the things you've mentioned.
When less discretionary spending happens in the economy, are there sectors that, as an investor, you would rotate to that would counter that? Staples, perhaps, less cyclical, defensives. You already talked about some commodities like grains that are undervalued. But what about stocks? Are you looking at that? Are you looking at any particular sector now?
Yeah, well, there's a few special situations that I've been involved in over the last year. Like one of them is traded in Vancouver. That's been very interesting. It's a stock called Hydrograph. I have no idea whether they're going to be a multi-billion-dollar company or it's going to blow up, but I've been in that. But with rare exceptions like that, I'm out of the general stock market. The general stock market is basically a high-tech market at this point. It's all about investing scores of billions, hundreds of billions in artificial intelligence, computer farms, and so forth. I don't know. I think it might be a bubble. AI is a fantastic thing. I mean, the advances that are being made in medicine and science and many things, and the convenience that it's providing, they're marvelous. But I wonder whether all this money going into AI isn't a misallocation, and it's turned into a bubble, and it's going to blow up. And with technology advancing as quickly as it is, I wonder if much of the hundreds of billions being invested is going to be outmoded before it gets to be used, and way before it gets to pay off the investment that's been made in it. It sounds like a paradox, but this has happened before. So I've got no interest in the stock market, and especially not in that high-tech area in particular.
Besides what's currently happening in the Middle East, what are one or two events or developments this year that you think could move all global markets in either direction that you're watching?
The war getting worse is the big one. And I think it's a fair bet that the war is going to get much worse and is going to spread. I think the Iranians are going to come out on top of this. I don't think the U.S. or the Israelis really know what they're doing here. They've got a tiger by the tail now. And if the war goes badly and costs more, it's going to suck capital out of the productive areas of the economy and damage people's psychology and destroying all the real wealth involved. In particular, destroying a lot of oil and oil production, which the world runs on. I mean, oil is the world's number one commodity. The world can't run without it. You can't make fertilizer without it. You can't make plastics without it. So you damage the oil and gas production industries, that could set off a daisy chain where all the debt we have in the world can't be serviced.
Does the timing of, I'm sorry.
Oh, go ahead.
Does the timing of this war seem a little bit peculiar to you from the perspective of the Trump administration's planning? The midterms are coming up in half a year's time, as you know, and Trump has made it a platform mandate to bring oil prices down. In fact, he's boasted about this before, how low oil prices have been in the past, and he was right up until now. And I mean, he and his cabinet knew this was going to happen if he attacks Iran. The oil price goes up, and inflation goes up, and the American people risk getting angry. He couldn't have waited till next year. Anyway,
I don't understand it. I mean, maybe could be that they were deluded into thinking that it was so easy to kidnap Maduro, and and then of course now Cuba that government is going to collapse. Good thing. Maybe they were deluded enough to think that the Iranian people would revolt, but actually just the opposite might happen. They might see their country under attack and gather around the flag. So it was the opposite of what they were hoping for, I suspect. They thought it would make things better. I think they guessed wrong bigly, as Trump would say.
Right. And so the other, I guess, spillover effect is perhaps the Federal Reserve now is going to be less incentivized to lower rates, much to the chagrin of the Trump administration, which has been pressuring the Fed to lower rates. And now they can if oil prices go up and everything else goes up. What reason do they have to lower rates? I mean, we've been counting on lower rates to stimulate the economy. Yeah, go ahead.
Well, they can't, because the fact is, maybe they can set short-term rates by the amount of T-bills and short-term paper that they buy, supply and demand with interest rates. But to do this, they have to print up lots more fiat currency. And as inflation goes up, long-term rates always reflect that. So I think that, look, people forget that during the early 1980s, the U.S. government was paying 15 to 18% in rates, very, very high rates. They went down for 40 years until they bottomed at almost negative numbers in 2022. Rates have been going up since then, regardless of what the government wants or does or anything. And I think rates are headed up now in another big cycle. It's going to take them back to and above the levels we saw back in the 80s. So bonds are a very bad place to be right now. We're entering a major bear market for bonds. Interest rates are going higher. Doesn't matter what the government does. Printing up money is going to increase inflation and inevitably lead to higher interest rates, not to mention the exit from the dollar, which isn't going to help the situation.
The final piece of...
Nobody wants to hold a hot potato, and the dollar's turning into a hot potato.
And the final piece of news I'd like to get your reaction to concerns private credit markets, which have been trending all over the internet. So first, a number of banks on Wall Street, including Morgan Stanley, asset managers rather, and Cliffwater have capped redemption outflow. So Morgan Stanley and Cliffwater LLC capped withdrawals from their multi-billion-dollar private credit funds after investors sought to redeem vastly more than the vehicles allow. Cliffwater's $33 billion flagship private credit vehicle limited redemptions to 7% of shares in the first quarter after investors sought to pull out a record 14%. Same thing with Morgan Stanley, which has almost $8 billion in assets, returned around $169 million. Meanwhile, JP Morgan is marking down loan portfolios of private credit groups. We just by looking at the information presented here, what does this trend look like to you, Doug?
It's a sign of one more sign, there are many, of the U.S. and Canada being greatly over-financialized. And with interest rates having been as low as they were, people were reaching for a couple more percent by packaging up private deals. So this is a lot of debt. And as the economy slows down and earnings fall and a lot of people can't make their payments. I think there could be a real panic in the debt markets. So to me, it's the inevitable becoming imminent at this point. I don't expect they can too much debt, solve that stuff before it's too late. And it's gone down a lot already.
Yeah, well, that's a powerful message to end the conversation on. So we'll stop here. Thank you, Doug. Tell us where we can find your work and what you're working on these days.
Well, I guess I mentioned the last time we were on, Matt Smith and I have completed a book called The Preparation, which talks to young men about why they should not go to college and exactly what they should do instead to prepare for the times ahead. The Preparation. That's one thing. Working on another novel. This one will be called, the last one was called Assassin. This one's called Terrorist. So that might be out before the end of the year. And a lot of the specific investments that I'm making, and speculations, I should say, more than investments today, are in Crisis Investing newsletter. Internationalman.com is our free daily blog. It's really good. Great articles every day. And I have my own show on YouTube, just like you do, David.
Excellent. We'll put the links down below, so make sure to follow Doug and his colleagues there. Thank you, Doug. It's always good to have your wisdom, and I encourage everyone to check out Doug's work and follow Doug. Appreciate it.
Thank you, David.
And thank you for watching. Don't forget to like and subscribe.